Hello, everyone, and welcome back to Financial Algebra with Ms. Passmore. Today on the agenda, we're going to be talking about Section 11.4, cash flow and budgeting. The last time I made a video for you guys, we were talking about Section 11.3, which was charting a budget. And then last week, I had you guys work through a couple activities of reading articles and figuring out a little bit more about a budget. I just figured to give you guys a little bit of context into well, how do I actually create a budget and what kind of things go into creating a budget and how should I go about this was a little bit more helpful instead of just diving right into one. So hopefully that gave you some context into how you personally can create a budget or the most common types of budgets out there that you can start with because it can be a very overwhelming task. So today we're going to talk about 11.4. We're actually going to talk about just the first learning objective. I decided to break it down into the first and then the second and third we'll hit up tomorrow and do a couple extensions on it. But I just thought this would be a little bit more attainable considering this is the first time many of you will have seen a budget other than like an online example as we go through one. Want to talk about how to create that spreadsheet, show you how to use formulas and things like that. So today we will develop and interpret a cash flow chart. And don't worry, we will talk about what cash flow is in just a few minutes down the road here. So let's get into it, shall we? Cash flow. You can see that maybe there's cash flow from business, analysis, money, investment, accounting. We're going to be talking about cash flow for our personal budgets today. And additionally, I chose this little image because we've been talking about these different types of graph, bar graphs, line graphs, things like that. That helps us to analyze our budgets or our cash flow charts in today's example. So let's go. First things first, my essential question to you, something that we should be able to answer by the end of this, is why should you plan for expenses, reduce debt, and grow savings? It's important to ask ourselves why. We need to have a purpose before we go into anything, especially anything finance related. But I want you guys to stop for a second and think about why it would be important that you would want to plan for some expenses in your life, especially heading into adulthood. Hashtag adulting life is a little stressful. So why should you plan for certain expenses or all expenses? What's the purpose behind reducing your debt that you're inevitably going to accrue over your life, right? Why should you plan for that? What are the benefits to that? What's the purpose for that? And then also additionally, what is the reason for wanting to grow savings? So this is going to be your guys' warm-up problem. So if you haven't already, go ahead and pause the video. And in your HyperDoc, go ahead and answer this question. Let me know why. And I'll encourage you as you're answering this question to think back to the articles that you read last week. A lot of them emphasized making saving a priority. Why is that? How could this be used in your reasoning, your personal reasoning behind why you should plan for these things? And why formulating a plan might be beneficial to you in the future. So if you haven't already, go ahead, pause this, answer that question, and when we come back, we'll move on to the next slide. I forgot about my images, so there's our census, there's us decreasing our debt, and there's us growing our money, y'all. Okie dokie. So I just left you asking you why we should plan for expenses, but furthermore, you guys will come across a purpose, but the second most important thing is not only figuring out like why am I motivated to do these things, but formulating a plan of how am I going to do these things. They're important for a reason. Everyone's reasons might be different, but coming up with how we're going to do that is really important. So how do we plan for these expenses? How do we reduce our debt? And how do we grow our savings? Well, considering we're in the whole unit about budgeting, it's going to have to tie back to that. So as we've seen so far, a budget is really exhaustive. It's a very large topic that you could read on and on and on, and so many articles about a budget and still feel overwhelmed and still not really know what it encompasses because it's so much more than just a list of numbers that charts your income and your expenditures. you guys see that there's so many different things you need to account for when going into a budget. There's so many different types of budgets out there that might be better for your situations and things like that. So it's so much more than just a chart or a list of numbers of things coming in and out. Because it's a super thorough plan that takes into account your financial goals, and then it also takes into account all of your financial obligations. That's why listing out every single expense is super important when charting your budget. Although it's a crazy plan that goes through everything, it also allows you to plan for fun stuff, future spending, perhaps, or saving or fund money. It allows, because it has this exhaustive picture of what all of your expenses are going to be, it allows you to look towards the future. And in that comes financial freedom. So, a lot of you guys at the beginning of our second semester here, when we start talking about independent living, going to college, things like that. A lot of you pose the question of well, how do people get past the point of just living from paycheck to paycheck? That's a big question to be asking, and it's really, really hard to overcome and control your financial situation. But one of the great starting points is with a budget. If you don't know exactly what you're working with, how can you determine exactly where you want to go or where you'd like to be? We have to create a goal. So it gives us control over a financial situation, which honestly is a really nice feeling. It's a nice feeling to make more than your expenses, but it's even nicer to have control over your financial situation and to create goals and then surpass them and figure out a plan and work with your budget to figure out where you're going to go to next. Additionally, this can be a huge motivator for you. Once you have that control of your financial situation, you can become motivated to do a bunch of fun stuff with your money, right? Because our budget is a product of financial and non-financial goals. For example, you might want to take a vacation at least once a year, right? That is a non-financial, well, that's a financial goal because you want to be able to have enough money left over to be able to take this vacation, but it's also non-financial in the fact that it's something fun that you want to do. Eating healthier is both a financial and non-financial goal as well, right? So you have to make the financial choice. Can I afford the groceries to eat healthier? And even just improving your public speaking skills. That seems completely non-financial at initial glance, but if you really think about it, you're probably going to need to invest in some sort of maybe books to read, your time, things like that. So these are some motivators that you could use after we've charted our budget. The most common goals that people have when planning for expenses, reducing their debt, and growing their savings is that they want to increase their savings, increase their money, and then they want to make sure that they have less debt. They want to reduce their debt. So once you have goals, it's really important to look at two things to see if we can actually achieve these goals. Okay, so say your goal is to increase your savings and decrease your debt. It's really important to look at two things to determine if you can actually reach that. The first thing you have to look at is your cash flow, which basically just analyzes your current income and expenses. And the second thing that you're going to need to take a good look at is a cash flow analysis. So, how is money coming in and out over a fixed period of time? So, sometimes we do a cash flow analysis month to month. Sometimes you do a cash flow analysis every year. And so on and so forth. So not only do we need to know how much money is my income and how much money are all of my expenses added up together, which is the whole purpose of the budget, but we also need to know about the analysis over a fixed period of time. What does that look like? Can I adjust it? So on and so forth. So jumping into the cash flow analysis, to do this, you have to begin by collecting monthly amounts for the following categories. And this isn't set in stone, but this is a pretty solid choice of some categories to be collecting to, begin starting our analysis of where's money coming in, where's it going. So you definitely have to have income. It wouldn't make sense to have a cash flow analysis if you had no income. So this is all your gross income, after-tax income, primary or secondary jobs. Maybe if you are on unemployment benefits, perhaps you're an older individual and you're on Social Security, that's income, right? Any interest you're earning, dividends, perhaps you have child support to account for, alimony, annuity income, gifts, etc. Most of us starting out, we're really just going to have a primary job to go on, but this is something to keep in the back of your head if you continue to do this throughout your lifespan, that these could potentially be different areas for your income to perform your cash flow analysis. Another category would be your fixed expenses. And it's going to be your essential stuff, your mortgage or rent from month to month. Do you have any loans to repay? What about insurance? Things like that. You're also going to want to account for variable expenses, which is going to be like food, utilities, so on and so forth, your cell phone bill, things like that. The things that vary from month to month, but are generally in like a ballpark amount. And then savings. So financial advisors suggest thinking of this as a fixed expense, so something essential, right? But depending on your situation or where you're at in your life, this could be a variable expense. Maybe some months you're saving more than others, depending on the way you live your life. But the main idea is to budget in your savings. A lot of the articles I had you guys read did specifically say to make sure that you account for savings. Make savings a priority. If you don't save now, you're going to be kicking yourself in 5-10 years and be like, oh my gosh, why didn't I start? It was so easy, and just get used to that way of life. So savings is important for your cash flow analysis if you want to be financially free, if you want to be in control of your finances and not stressing as hard as you would be if you didn't have a savings from month to month, year to year, things like that. So you're going to have to create a list basically and collect the amounts for all of these categories, and you're going to be able to create your own spreadsheet to analyze your cash flow. Now, of course, you can go on the internet and use a template that they have for you as well. They're all over the place. Either of those will work, but you do have to make the breakdown of these categories and collect the amounts of them. Otherwise, you don't have anything to work with. So the purpose of cash flow analysis is going to help you determine whether or not you're living within your means. So are you making good financial choices? Are you not? Where could you be better at it? Living within your means means you're not spending more than you make. So looking specifically at cash flow, as we're going to be analyzing it, if your monthly cash flow is a positive number, that means you have more income than what you're spending. That's a good thing. A positive number is a positive sign. That means you have more income than all of the expenses that you're paying month to month, year to year, depending on how often you're performing a cash flow. And then you have a choice. Where do you want all that extra money to go? Do you want it to go to the next month? Would you like to put it in your savings? Are you going to use it to pay off your debt? Are you going to put it towards your vacation fund? Like, where are you going to do with all of that extra money? This is where I'm saying, like, your financial freedom really comes into play. Additionally, a negative number means that you're spending way more money than you make. So this is a bad thing. A negative number is a bad thing. And if you're spending more than you make, you're going to need to readjust your plan, because over the long haul, that is just not sustainable. That's where you're going to get yourself into a lot of trouble, into a lot of debt, and so much more extra stress than you really need to be putting yourself through. So let's dive into the first example and kind of get an idea of what's going on here. So Dave and Joan want to chart their monthly cash flow. Create a spreadsheet that will help them keep track of their income and expenses for the month. Now, I know we haven't done a lot on spreadsheets lately. We did at the beginning of the year a little bit, and it's kind of hard over distance learning. But I'm going to do the best I can to help you guys determine how to create a spreadsheet that's going to help us chart their monthly cash flow. So I'm underlining the goals in yellow in today's presentation. So our goal is to create a spreadsheet. So Dave and Joan went ahead and gave us a list of their monthly expenses. They gave us, let's see, they gave us their rent, car loan, school loan, personal loan, car insurance, renter's insurance, groceries, gas, cell phone bill, their utilities essentially, entertainment. They're prioritizing savings. They're also prioritizing debt reduction. And then they also came up, so those are all of their monthly expenses. Now I didn't read off all of them, but they also have other life expenses just because as an adult you have more things to be financially obligated to. So medical and dental insurance, they pay $600 a year. You're going to have to pay auto-related costs such as getting your oil changed, tires rotated, tires, any major work done on your vehicle, home-related expenses, $250 twice a year. They're also paying for life insurance, and they have tuition to account for as well. Looks like they go on a vacation once a year. They do gifts, contributions, repairs, and also taxes. So, like I said, in order to come up with the cash flow, we have to have all of the expenses in those 4 categories that I was talking about earlier. Your income, your essential expenses, your variable expenses, and your savings, right? So here's all of their expenses broken down into monthly, not monthly, but overall, these are the things that they're going to have to consider when creating a monthly cash flow. In order to create a spreadsheet, we have to have this information up front. There's not, I don't want to say there's not a way to work around this, but it is incredibly unwise to not have this information. And to not have an accurate amount of how much this is, if you're just kind of guesstimating, you're not doing yourself a favor. It's better to get a very accurate depiction of what you're spending month to month, or just in general, so that you're accurately forecasting your budget and your expenses and your potential excess money that you have in your accounts. But we have to have this first. So in order to create a spreadsheet, we have to collect the monthly amounts of their income, their fixed expenses, their variable expenses, and their savings, kind of like in that list that was provided by Dave and Joan. So for the income, this is going to include primary employment, secondary employment if they had a second job, any other income that they have coming in. And in our spreadsheet, we're going to need to add these up at the bottom to get a running total. I'm going to refer to this a bunch of times, but as we get into our spreadsheet, we're going to need to add these up. Then our next category was fixed and variable expenses. So this has the following expenses for Dave and Joan. They have a rent, car loan payment, education loan payment, personal loan payment, health insurance premium, life insurance premium, car insurance premium, homeowners or renters insurance, cable. They also have groceries, dining out, gas, cell phone, electricity, water, sewer, sanitation, medical, entertainment, savings, debt reduction, and other. So again, in our spreadsheet, which I'll walk you through in a second, we're going to have to add all of these values up to get a running total per category. And I'm kind of saying that the categories are fixed and variable expenses. Additionally, they have non-monthly expenses as seen in their little notepad that they brought us, right? So we have to account for that too, because that's still an expense that we want to track. So this is asking the user to input the accumulated yearly amount for any expense that doesn't occur on a month-to-month basis. And I think this will make more sense when you see what they are. The categories for Dave and Joan are going to be medical and dental, auto, home, life insurance, tuition, vacation, gifts, contributions, repairs, taxes, and so on. So those things, obviously you don't pay your taxes on a month-to-month basis, so we still have these expenses to account for. Again, in our spreadsheet, we're going to need to add these up at the bottom and get a running total per category. So here's a couple bit of information, not all of it because it's an exhaustive list, but a little bit of information for each category. So their combined income is $5,600 from their primary job. So we're going to need to input that in our spreadsheet. Additionally, they make extra money by helping out a family-owned business on the weekends, and they earn $500 from that together. Again, this is for both Dave and Joan, not each. So my question to you is, what is their total income? What is their total, I guess I should say, monthly income? Well, it's just going to take their primary jobs plus their secondary jobs, 5,600 plus 500, that gives us 6,100. So that is something we're going to need to calculate in our spreadsheet. We don't want to do this by hand and type in this number 6,100 in case this amount is to ever fluctuate. And I'll show you how to do that in a minute. As far as fixed and variable expenses go, they spend $2,400 a month on rent. They only have a cell phone, so they're not going to pay for a landline. And also, where they're renting, they don't have to pay sewer usage fees. Their life insurance, medical, and dental are not monthly, so those are going to be in the non-monthly expense category. And then also their bills like tuition, vacation, medical and dental are either bi-monthly, quarterly, semi-annually, or some other interval. So again, those are going to go into the non-monthly expenses. However, it is still important and possible to prepare for those bills by examining their impact is spread evenly over the year. So the reason we're bringing in these non-monthly expenses is because to get an accurate depiction of our cash flow is I want to account for all possible expenses. So I'm going to make sure I'm prepared for those bills by spreading them evenly over the year. And non-monthly expenses, ask them to account for anything that doesn't happen on a monthly basis or might come like once or twice a year, quarterly, things like that. So for example, they pay life insurance $150 every 3 months. So if I did every 3 months, so that's going to be January, February, March, April, May, June, July, August, September, October, November, December. That's 4 times a year. 150 times 4 is $600. So they're paying $600 a year for their life insurance, which probably isn't too bad. I don't know. I haven't looked into life insurance myself. So again, in order to be prepared for these non-monthly expenses, it's important to prorate them, which is what I was talking about, like preparing for them in advance. So we're going to find out how much they pay in a year, and then we're going to divide them proportionately as if it was a monthly expense so that we do have that money stored away for those non-monthly expenses. So we are prepared for them. So in our spreadsheet, and this is just for the non-monthly expenses, we're going to have to add up all of these non-monthly expenses per year, prorate them, and determine their monthly value. So to prorate them, we're going to just add them up and divide by 12. So for example, they have a total of $12,000 a year in non-monthly expenses. And when we prorate them, we're going to take $12,000 divided by 12 months in 1 year, which essentially breaks down to $1,000 a month in order for $1,000 a month for their non-monthly expenses. So to be able to make sure that I have enough money throughout the year, $1,000 a month has to go towards my non-monthly expenses. I will be able to make those expenses when they arrive. After all the categories have been determined and added up, it's time to determine our cash flow, which is the purpose of all of this. So, cash flow, money coming in versus money going out. Do we have a positive cash flow? Do we have more money coming in than going out? Do we have a negative cash flow, less money coming in and more money going out? So in order to determine cash flow, we're going to make a line for this on our spreadsheet. And we're going to add up all of the expenses in one line. So all of the expenses. And then to figure out the cash flow, I just need to take that number and subtract it from my income. So I know that's a lot, but hopefully going through this will help you guys feel a little bit more at ease. So they want to chart their monthly cash flow. Still need to create a spreadsheet. We've gone through all the process of how we're going to make that spreadsheet, what we're going to do to get there. Now I just have to make it. Once we have all of this information, all this background information, we can start to make this spreadsheet. So it might be helpful if we knew how to do that. So I made a little step-by-step how-to. One, we have to create the categories, and we've already talked about the categories, I don't know, multiple times so far. So our income, fixed expenses, variable expenses, and non-monthly expenses. Then we have to go and make a spreadsheet with that in mind. So you can use Excel or Google Sheets. I'll be using Google Sheets just because it's really easy to share with you guys. Then we have to input all of the values under each category. So referring back to that list that Dave and Joan made us, we have to input all of those values for each category. Then in the next column, we're going to input the amount that they're spending for each category. So this also came from the list. They told us exactly how much they're spending month to month on these things. And we have to find the total in each category. Like I was saying, we're going to have to add all of these up over and over again in that dark red color. And you're going to want to use a formula for that, not a calculator and entering it in by hand. And we're going to have to figure out the total expenses. So we're going to have the total for income. We're going to have the total for fixed expenses. We're going to have the total for variable expenses. We're going to have the total for non-monthly expenses. So we're going to have the total for all of them. And then we have to determine the monthly cash flow, which is taking all of those expenses and subtracting them from the income. Hopefully what we get was something that looks like this. So I'm actually going to bring you to the document that I have already, and I'm going to show you how to come up with these values right here. I'm not going to talk, I'll talk quickly about how to create these guys, but the main idea is I want you guys to be able to figure out the total values and then the monthly cash flow. So it's going to look something like this, but let me go over to that right now. So I'm going to take you guys over to my drive. So we're talking about 11 for example 1, and I want to hide this. And we had our category of income. And remember, when we went back, we talked about the primary employment, the secondary employment, and then we can also account for any other employment. So remember, Dave and Joan made $5,600 a month together from their first jobs, and on the weekends they made $500. So this is what I'm saying, where we enter our values, we just type it in, right? I could erase this. Primary, just typed it into this column, and then also I just bolded this value. So I highlighted it and clicked the bold icon there just to kind of help my mind see things. Then we went through our fixed expenses, right? Looking at back at their list, which I know you guys don't have in front of you. They had to pay for their rent, their car loan payment, school payments, personal loan, health insurance, life insurance, car insurance, homeowners. Now notice that life insurance doesn't have a value in there. You could type in 0 if you wanted, or you could just leave it blank if they don't have any. That works fine. And then we entered in the amounts on the right. So they paid $2,400 in rent. I believe I mentioned that detail, and then broke down these values from the list. And we had variable expenses, which is groceries, dining out, fuel, cell phone, water. They don't pay sewer or sanitation, so again, those are blank. They don't pay for medical monthly either. They pay that a couple times a year. Entertainment, savings, debt reduction. Now at the bottom of each category here, I have a total income. So I want to make sure that I enter in a formula to figure out the total income. Moving over to the last category is non-monthly expenses. So they have medical and dental, auto-related, home-related, life insurance, tuition, vacation, gifts, contributions, repairs, taxes, and other. And this is all the amount per year. So it doesn't tell us how often. We'll have a different example that walks us through that next time. But these are just how much they spend per year in order to get a good idea of the cash flow. So now I want to talk about how we're going to create the total income values. So here you select the cell that you want to calculate the income in, which is going to be in my totals value. And up here it has f of x, like a function. And you can use this drop-down menu if you'd like to do the sum, which means they're adding things up together. Or once you get comfortable, you'll remember that it's equal to sum and your starting value to your end value. So I like to highlight in here, oops, and say that it's this value, and I drag it down, and I can see that this this little rectangle is highlighted. So that's saying it's going from B2 to B4. This is column B, number 2 to B4, so I'm adding up all of these numbers. Now it's important to make sure I use a formula here instead of doing 5,600 plus 500, because if these numbers ever to change, then I have it already good to go in my spreadsheet, which is the perks of using a spreadsheet. So I'll see my income is 6,100. And I want to do the same thing for my fixed expenses. I want to say that it's equal to the sum of, I'm going to start here and just drag it down and close my bracket. Enter, and it should have added them all up, right? Fixed expenses, so starting with rent, going down to cable. Now we're going to add up our variable expenses. I'm going to say this is the sum. You'll notice that it will say suggested based on the data. So what's cool about Excel and Google Sheets is it starts to become familiar with what you're doing and can predict it. So sometimes I'll just click that and see, is this the summation that I want it to perform? I do want it to start with groceries, and I do want it to end with other. So I click enter. Cool. Lastly, we have to figure out how much non-monthly expenses do they have per year. This is going to be the sum of this value to this value. Actually, if you ever mess up, you can type in the number and see if it goes to where you want. So this is where, remember in the detail, I said they had $12,000 in non-monthly expenses. That's what I'm talking about. I added up all these values and we got $12,000. Now we have to prorate it, meaning plan for this in advance. If I have $12,000 and there's 12 months in a year, I need to know how much non-monthly expenses I will have per month. So here I actually want us to use a formula again, and I don't want you to say 12,000 divided by 1,000 and just write in the number 12. I don't want you to do that, because if this number is to ever change, you're always just going to have the number 12. We're going to say this is equal to, our formulas always begin with the equal sign. This cell, no matter what that value is, it's going to account for it, divided by 12. And it will automatically calculate that for us and give us $1,000. Cool. Lastly, we have to figure out our total expenses. So keyword here is expenses. I do not want to account for the income. I only want the expenses, expenses, expenses. So this is going to be equal to this expense, plus sign, this expense, plus sign, this expense, enter. Because those are all monthly, I wanted the monthly ones. That's why I didn't add this one. I wanted the monthly ones. And now to calculate our cash flow, right? This is how much I'm spending every month, $5,990 a month. I want to compare that to how much I'm making. I'm making, luckily, 6,100. So we can tell already that our cash flow is going to be positive. But in order to use it in this spreadsheet, we're going to enter in the equal sign into this cell right here. And we're going to take our income, total income, and subtract this value here and hit enter. So this number is positive, telling me that I have more income coming in than expenses going out. which is a good thing. Yay! Okay, so we went through this, we got all of those values. Notice that the monthly cash flow is $110. It's that positive value, meaning that they have more income than outcome, right? Right there. What does this mean? This means they're making more money than they're spending, right? They're making more money than they're spending. This is a good thing for them. They can do whatever they would like with that extra money, with that extra $100 a month. My question to you that I'm not going to answer, but I'll have you answer in the hyperdoc, is suppose that their cash flow was negative $160. What advice might you give to Dave and Joan? So based on everything we know so far about charting these budgets, determining this cash flow, what financial advice would you give to Dave and Joan to help their situation go from the negative to the positive, or perhaps even just break even? Cool. And then this is just a quick little example as well to analyze their cash flow. So many consumer credit counseling agencies suggest that your transportation expenses shouldn't be any more than 10 to 15% of your budget, and that your savings should be at least 5 to 10% of that budget as well. Using their cash flow analysis, they want to determine whether they're in the guidelines for these categories. And this is super simple. So now we have information about how much money they're spending overall, right? I want to specifically look at transportation expenses and then specifically look at their savings and see if they fall within these values that people suggest. Okay, so what we have to do is compare their expenses and see if it falls within those percentages for each category of transportation and savings. So let's talk about transportation first. Going back to their list, which you guys will have access to, we see that they spent $200 a month on their car payment, $60 a month for insurance, and $160 a month for gas in their vehicles. So we're going to need to note these values because they're parts of the transportation umbrella. They also said that they spend about $700 a year for auto-related expenses. So if I was to just prorate the $700 a year to figure out how much a month that is, I'd say it's about $59. 700 divided by 12 is 58.33333. That's about 59 bucks. So let's add that into their monthly transportation fee, right? So we're going to need their total transportation expenses, and then we're going to see if it falls within 10 to 15% of their overall budget, their overall spending. So we're just going to take 200 plus 60 plus 160 plus 59, which is $479 a month. And we're going to see if that falls into their monthly budget and if that's 10 to 15%. If it is within that, then they're following the credit counseling agency suggestions. If it's less than that, then they're actually doing pretty well. If it's more than that, then they're going to want to perhaps lower some of those transportation fees in one way, shape, or another. So our goal is to figure out what the percentage is so I can compare it to 10 to 15%, right? So it's their auto-related expenses per month in relation to their monthly income. So the way we're going to do this is set up a proportion. Auto-related expenses, which we just found out, divided by monthly income gives us 479 divided by 6,100, which gives us 0.078 approximately. Converting this to a percentage gives us 7.8%. Since 7.8 is less than 10 to 15, then yeah, they're within the transportation budget. They don't want to spend any more than 15%. So they're actually under budget, which means they're doing pretty good. They could accidentally spend more. Perhaps they get into a fender bender or get a speeding ticket or something like that. That would be a cost that they'd have to account for. So their transportation budget might go up, but since they're under, they should be okay. So we're going to want to do the same thing for their savings. Okay. So again, we want to compare their expenses and see if it falls within the percentages for their savings. So Let's just repeat this, except it's much shorter now because we don't have as many things to account for. Looking back at that spreadsheet, we see that they're making sure that they put away $300 a month for savings. This is under their variable expenses. So the percentage of that is that and compared to their monthly income. Again, we're going to set up that proportion. Savings over monthly income, so 300 divided by 6,100 gives us 0.049. Multiplying that times 100 to get a percentage is 4.9%. So they are slightly below the suggested 5% in terms of savings. Now, the reason why they were both below to begin with, but you actually want to maximize your savings. So they might want to put a little bit more money towards their savings, because we noticed from their cash flow that they have 110 extra dollars lying around. Maybe they could put that towards their savings and start to build up their savings and fall within this 5 to 10%. They're really, really, really close though. And we are not going to go into example 3 yet. So I'm going to stop the video here, as I know we covered a lot of information. When we come back later on this week, we're going to talk about the other two learning objectives, which is to interpret a frequency budget plan and interpret a year-long expense budget. A year-long expense budget plan. So right now we've just talked about cash flow charts for a month, and we're going to expand that into a frequency plan, which will then help us determine year-long plans. Alrighty, I will catch you guys later. Thank you so much, and I hope you have a wonderful day. Bye.